Nomura is overweight in India and maintains that the economy will benefit from lower commodity and energy prices. He believes that the outcome of the upcoming elections would be an important mover for the markets. Let's hear out Michael Kurtz, Chief Asia Equity Strategist from Nomura.
India is, for us, what I would call an against-the-grain overweight. Why am I overweight India if, as I've just shown you in this table, it seems to be one of the more structurally vulnerable markets? And indeed, as we all saw over the summer, India was amongst the more volatile markets. We have two basic reasons for that. If you go to figure 89, you'll see the net exports or net imports around ASEAN, Australia, and India for three basic categories of resources: foodstuffs, energy, that's primarily oil, or metals. All right, so soft commodities, petroleum, and hard commodities. And India, as you can see, is one of only two markets in the Asia-Pac region that is a net importer of both oil and metals. The only other one is Thailand, by the way. Australia and Indonesia are net exporters of all of those things. Now, in the slowing China, stronger dollar world that we're looking at next year, we think that commodity prices remain downwardly biased, as they have been for most of 2013. And that will work against the interests of the commodity and energy exporting economies, but very much in favor of the commodity importing economies, India primarily. And that not only attaches to the macroeconomic level, where it comes in the form of an improving terms of trade or an improving trade balance, but at the micro level, because it flows through into Indian corporate earnings. And by the way, India's corporate earnings in calendar Q3, or what India would call fiscal Q2, surprised on the upside, mostly because bottom line profits turned out to be improved by softer input costs. So it is flowing through into corporate profits. So India benefits from lower commodity and energy prices in a way that most of ASEAN does not. And the second reason is political. We do think that markets will be willing to attach a higher multiple to India should the Indian voter continue to turn in the direction of more pro-growth policy. And the takeaways from the state elections that have been underway over the past couple of weeks, as we await the final results in certain cases, seems to be that the Indian voter is embracing the BJP. And I'm not here to reveal my own political biases so much as to at least suggest that the BJP does seem to have a more growth-friendly rather than redistributionist policy agenda. And Indian markets right now seem to be willing to offer higher multiples if the BJP continues to accrue momentum as we look towards the national elections, which will occur in May of next year.